Hello and welcome to Investing Confidential. We'll talk about China today. Everyone seems to be bearish. Everyone's jumping on the bearish bandwagon of China. I'm going to talk about why they're bearish, why well, there's reasons to be bearish, but also why you have to be a little bit contrarian here when it comes to China. But certainly China is on the forefront almost every day for a lot of different reasons, and I have a much different take than even the so-called experts on why I believe there are good times ahead, not in the very short term, but good times ahead potentially when it comes to the Chinese stock market. So let's just jump into it. There's good reasons to be concerned. But as I said, I think those reasons, a lot of those negative reasons have already been baked in. Okay, China has a lot of problems, big problems that I've pointed out in the past. But so does the U.S., so does Germany. Germany's got bigger problems than China. Germany is actually in a major recession here, and they've got inflation problems. China is growing very slowly, slow as it's ever grown in the last 30 years, but there's no inflation. Okay, so it's a different kind of situation. The UK has got problems with massive runaway inflation. Their politics are a mess. Okay, so they got their own issues. Everyone's got issues, so China's not alone. But at the end of the day, China's problems comes down to leadership, okay? The state, the CCP, okay? And there's a major transition that's occurred that no one's talking about. I'm going to get into that later, but this is where the positive outlook comes through. But we'll get into that again, because everyone seems to be only focusing on the bearish. And again, this information has been out there for a very long time, okay? Well, let's look at the numbers. Okay, here we see China manufacturing, purchasing management PMI about to sink below 50 in the contraction. That's recession territory. That's contraction territory. That doesn't happen very often in China. Okay, it's going to be interesting to watch this. Then we got China FDI, foreign direct investment, tanking. Why? Very simple. No one's made any money in China, exception of Apple. Okay, and all Apple does is they manufacture them. But anyone who's invested in China, I'm talking about, manufacturing investment, all this type of big corporate investment, what we call FDI, okay, they're not making any money. They haven't made any money in 25, 30 years. Okay, they're constantly losing money. So what are they doing? Not investing anymore. And now we've got all of this move towards bringing the supply chains back. And guess who's benefiting? Mexico. Massively. Okay, if you haven't seen, the Mexican market's probably been the #1 performing market. It's had the best performing currency versus the dollar. Mexico's on fire. All-time highs in the market, on fire. Whereas China's down 50% from its highs, Mexico is at all-time highs. Probably didn't know that, but that's the reality. China's been cutting rates, okay, in desperation. It's a desperate move to stimulate the economy. But remember, China has been stimulating for almost 18 months, okay, through the real estate. Okay, I don't want to go into the history because I've done it numerous times, but essentially, as I told you, real estate is the engine of growth for China. Not manufacturing, not tech, it's real estate. It has been that way for 30, 40, 50 years, and it's always going to be that way. But in the past, real estate stimulation has resulted in positive change. This time, no. Okay, they've been stimulating. They've tried cutting rates. They've tried giving incentives. No one's buying it. No one's buying real estate. Okay, look at new home prices. Okay, reversing lower again, even after the stimulus. Here we see residential building transactions, the lowest in 5 years. Again, this is unprecedented because we've had big stimulus. Okay, here we got housing loans. China loans for housing. This is the first time ever these loans have ever been in contraction. The first time ever. Okay, it's incredible. Okay, here's Chinese bonds. Okay, what they call high yield Chinese bonds in U.S. dollars. They're tanking again. They had some rally, now they're tanking again because the realization is the stimulus is not helping the real estate market. Okay, China's stock market, again, testing recent lows. But will it, right? Will it test the recent lows? Okay, you can hear, I'm going to show this chart again, but here's a long-term chart of China. Okay, it's been doing nothing, and it's sitting here at the 200-day moving average. This is an interesting time. You're going to see it move one way or the other. I bet it's going to move higher over time, but that's enough. We'll talk about it in a couple minutes. Okay, here's the Chinese yuan. Why is the yuan important? Because in terms of trade, China is very competitive, especially against Europe. This is why Germany's having problems. This is why all the exporters in Europe are having problems, because China is so competitive right now because their currency is incredibly weak. And again, they're still an exporting country. All Chinese assets have been underperforming year to date. You can see it here. So whether it's the yuan or the stock market, whatever it is, financial assets have been underperforming because China's still in a deflationary spiral. Okay, there's no inflation to deal with in China. They're not having inflation issues. They're having deflation issues, and they've been exporting deflation for a very long time. But this is different. This is monetary deflation, and this is going to hit the U.S., Europe, and everyone else. This is the big risk. And here's the first sign that the CCP, the Communist Party, is getting very worried and very serious. They just replaced the central bank head. Well, it doesn't happen very often. They replaced it with a real technocrat, and they want things changed. So they're making changes. Okay, but nothing's helping in the short term. Here we got copper production slowing because there's no demand out there. No demand internally for China, no demand externally. So, the copper market probably is bottomed out. Okay, probably bottomed out, but right now it's causing a problem, or it's showing that there is a problem. And again, China's stimulus, they've been stimulating a lot. Now, loan growth is stagnant. Okay, it's stagnant. It means it's not working, so they stopped. Okay, and here's what we talked about: deflation, the PPI, indicating deflation. And by the way, folks, when deflation hits, it's worse than inflation on the stock market, much worse. So just be prepared because it's coming to the U.S. because China is exporting deflation. Now, in the short term, does the U.S. want this? Sure they do, because they think their problem is inflation. And they think this current rally shows you that they believe they've tackled inflation. But deflation is coming, folks, and you can see it in the U.S. dollar. And we'll be talking about that very soon. But going back to China's problems, look at this youth unemployment, over 20%. And this is because the current administration, Chairman Xi, made some major mistakes, and he's paying for it right now. And the big mistake was he destroyed the technology industry. Now he's reversed recently, but he destroyed it. So now youth unemployment is going up. And what does that mean? That means social unrest. And what does that mean also? It means that here we have second quarter GDP very weak. And that's not good for the rest of the world. The second or third biggest economy, having major problems going into a so-called recession. And here now we're going to talk about the positive stuff, the potential. Okay, in negative we have positive. This Chairman Xi, is under a lot of pressure. Okay, it's something I said a few months ago. He made a lot of mistakes. He attacked the real estate industry because he wanted to put his political enemies in jail, and he did it successfully. But now that can't happen anymore because of regulation changes. He attacked the technology industry. He put the founder of Alibaba in jail for a long time. All he did was destroy the economy with these two moves. Then he had the zero COVID, bad move. That was his move. So when you read the press, okay, every day, you're reading how strong this guy's going to Russia, he's going here, he's going there. Let me tell you something. And I said this once before, and I'm going to say it again. This guy's dead man walking. Okay, his time is numbered. They're not going to get rid of him in the very short term, but he's got no power. He destroyed the economy. destroyed the country, and he's paying the price. He's a figurehead now. He's a figurehead. And, you know, regional power brokers, they're issuing their own decrees without any authorization. They're doing their own thing. And there's nothing he can do about it because he's lost a lot of power because of the economy. And so, and this is another thing that I think is bothering the CCP. Look at China's exports by country. Now, China is just massively overweight to Russia and some of the other BRIC countries, but mainly to Russia. Now, China has, over the years, had a very diversified export base. Not anymore. Not anymore. In Russia, certainly you don't want to depend on Russia for all of that, for all your exports. And this is what's happened. Again, this is the Z policy. Something's got to change because the old guard is not going to stand for this. They're not happy. They cannot be happy. So going back, all this negative stuff, is it factored in? I think so. Close. Are Chinese stocks good value relative to the past? Absolutely they are. Again, relative. Is everyone negative? Pretty much. But no one's short, right? You don't see people outright shorting Chinese stocks. And you need that to get bullish. So we're getting very close. Again, we're early. I'm always early on things, folks. I tell you, I'm not a momentum guy. I want to get there early because I want to make the maximum return. And it's too early to get bullish on China, but you need to watch it. You need to have something. Maybe you buy a small position in there because we're getting close because everyone is negative. As I told you before, here's the chart of the FXI, right at the 200-day moving average. Something's going to break, up or down. If I were a betting man, I bet it would go up. China's got to be on your radar screen. It's just too big not to be. And if I'm right about Xi Jinping being marginalized, this is very bullish because he is not a good person. He is not a good person to the people. He has been horrible for the economy. So if he were to be replaced, stocks would rocket, absolutely rocket. He's been horrible for the stock market. And look, China's a country where they've made their money in the stock market. A lot of money has been made in real estate, stock market, technology. This guy has destroyed all three. As I said, he's dead man walking. So on that announcement that Z would be gone, if the market happens to dip, you buy it. But in the short term, watch the 200-day moving average. If it breaks up, starts to break out of the downturn, jump on this market hard because it's going to make you a lot of money. So traders, watching carefully. Investors, it's still cheap, the market in China. You could probably make a good investment there. You got to pick stocks, not the indexes. So when you're talking about China, investors, be careful out there.